Hello, welcome back. This is Seewing Yee, and today I'm going to go over some very interesting information on the home construction site as it try to remedy the massive resale homes low inventory, historic low inventory. This is Seewing Yee, so let's dive right into it. This is a very informative information. All right, so let's begin. It says right here, home builders are at max capacity and the housing shortage keeps widening. Even with stellar new home sales, they are not building fast enough to overcome a towering housing deficit. This is real, people. We are entering into a housing market which we have never seen before. And this is not hype. This is pure factual information. We are entering a historic 1 million years low of housing inventory supply. And even given the current rate of 7% on the average, we are still seeing pent up demand of homes. All right, I'm taking into a different perspective. By the way, please like and subscribe to my YouTube channel. This is really good content. I have to admit myself. Everywhere you look, there seems to be bad news for an existing home market. A lot of negative headline, doom and gloom, and all the crash growth out there, just providing this fear base. They dwell on the fear of people. This is mind boggling. Interest rates remain north of 7%. Yes, the mortgage rate has been very volatile this past year. However, still, the median home prices nears record levels. Record median home price near record level at more than $410,000 as of June 2023. This is mind-boggling. We are going to see a renters nation beginning now record multiple renting than ever before in history of the world, not just America. Let me highlight the important points in this rather long article. So just bear with me. This is a very tiny, very good content, very high quality information coming from the website Housing Wire. New home sales were up 24% year over year, according to the U.S. Census Bureau, after jumping 20% in May. Meanwhile, existing home sales plummeted by 19% in June year over year after declining by 20% in May, according to the National Association of Realtors. This article interviewed one of the nation's largest home builder, Taylor Morrison, and they interviewed the chairman and CEO. Her name is Cheryl Palmer. She said about 2/3 of homeowners now have mortgage rates below 4%. This has driven new constructions, she added, with the percentage of new home listings more than double from the long-term norms over 30%. Because of the lack of resale homes in the market, because of the lack in effect, new home sales right now comprise 30% of new homes, which is probably a record high as well. So everything record, that's what's happening. Let's get back to this article. The lack of existing homes in the market is pushing prospective buyers toward new homes. Therefore, bolstering sales and construction, Cheryl Palmer said. That shortage is estimated to range from 1.5 million units, according to Robert Bates, who is the chief economist for the National Association of Home Builders and AHB, to some 4.4 million units, according to Fannie Mae, and up to 7.3 million units per National Low Income Housing Coalition. From the range, no, nobody have exact data, 1.5 to 7.3. So I don't know who to believe. The nationwide acute home shortage projecting for the next few years and beyond is as low as 1.5 million shortage to as high as 7.3 million units shortage for the foreseeable future. Again, nobody have a crystal ball and based on a lot of factors. At the end of the day, if you think right now is an unbalanced market, right now demand is greater to supply, wait until years down the road. Right now, it's at 2.8 months of supplier inventory nationwide, but it could get worse if the mortgage rate continue at this elevated rate around 6.5 to 7%. But in the long view, based on household formation, based on the future projection of population growth, we're seeing it with 1.5 million to 7 million housing units shortage. And this is a very concerning situation. So it's going to be a seller's market for a long time to come, in my mind. So it will continue to bring upward pressure on sales higher and higher consistently for the foreseeable future. Now, furthermore, one metric these experts are using is how they measure the future housing shortage, a severe shortage, that is. One metric are they using is how many jobs are we producing relative to how many housing permits are we producing, said Eric Huser, the Executive Vice President and Chief Corporate Operation Officer at Taylor Morrison, who his title is a handful. And as a country, he said it is 2.6 jobs for every permit. And the historic average is 1.6. He further added, we're producing more jobs than our permits. And you got a kind of baseline structural undersupply. Okay, Mr. Dis from the home building industry said, quote, under construction of new homes in the home market between 2012, which is right after the housing crash of 2008, 2009, and 2019, that 7-year time stretch, quote, left us with the housing deficit, end quote. Wow. This is an important comment. He further stated, we are expecting a number somewhat between 900,000 for single family home starts. He added, we need to build above 1.1 million to start reducing our deficit. Long way to go. Right now, whatever number you want to believe, said Brian Hale, founder and CEO of consultancy Mortgage Advisory Partners. He said home builders aren't building enough houses to cover that gap anytime in the next 10 years. So he's saying the consensus of all the experts I just related, for the next 10 years, we're going to have a housing shortage. Okay, demand is going to exceed supply for the next 10 years at least. So therefore, housing prices will continue to go up, and therefore we will not have a housing crash unless something catastrophic occurs on this earth. I don't know. No one knows. But, oh yeah, demand will exceed supply, and with this lock-in effects and the time it takes to build, to replace home inventory is all trending not in a good way. Anyway, so let's continue. Peak production at around 30% now. The home building industry is likely near the peak level. The home construction industry is already at a peak level right now at 30% of all the sales in the marketplace right now. Those people are talking about it. They spoke with the Housing Wire, the author of this article. So this why the home building industry has a lot of challenges moving forward, because there are still material shortages, such as the current lack of electrical transformers and the volatility of wood pricing, as well as shortages of skilled labor, zoning restrictions, and lack of land to build. Furthermore, in my opinion, financing challenges due to high rates are disproportionately affecting small and regional privately held home builders, which typically rely on debt financing to purchase land and fund construction costs. So not just individuals are impacted by the high mortgage rate in both the consumers, buyers, and sellers, we're talking the construction industry as well. The home construction industry are also impacting by the high interest rate. Okay, so this interest rate environment are very challenging no matter how you look at it. All right, let's go on. Another expert will be interviewed, Doug Farron, who is one of the three founding partners at Florida-based Shoreham Capital. He said large publicly held home builders, particularly those with affiliated mortgage lenders under the umbrella, they do have, quote, cheaper access to capital, end quote. And that, quote, definitely an advantage in the credit markets because this nation's large builders, they have large pool capital. They're able to get more financing, even under the current interest rate challenging environment. So they stand to do well. However, the local regional home builders, they have more challenges ahead because they are not as well funded as a large nationwide builder, and financing from the local banks are very difficult to obtain these days. So just keep that in mind. All right. Robert Diss from the National Association of Home Builders further stated high interest rate works to constrict the supply of new construction because 2/3 of home construction is still undertaken by private builders. He stressed that, quote, their primary source of capital to acquire land for development and then to build the home before they get the revenue from selling it comes from debt financing, high interest rate debt financing. Now you see the challenge, right? So another headwind facing home builders is there not enough development, not enough land to purchase in many parts of the country. That's an old saying by Roy Rogers back in 1 century ago. I think that's what my recollection that Roy Rogers said 100 years ago. We can't build land anymore. There's no more land. So real estate is all about land, right? Land is to provide the intrinsic value. So if you want to participate in real estate wealth, whoever you are out there, you could be a mom and pop investor, you could be a developer, you could be a home builder, you could be a whatever investor. Owning land is the critical point. That's the intrinsic value. Okay. And the structure you build above the land will add on to the value in terms of income producing, rental income, appreciation, the whole 9 yards, right? That you can't, there's no more land left. All right. So all the good precious land are being bought out systematically over the years. Furthermore, 2/3 of the home builders say lot inventories are, quote, low or very low. As much as the home builder wants to offset the lack of resale homes in the marketplace due to the lock-in effects, they have to first find the lots, find the land, and a lot of the land homeowners have some regulatory environment restricts zone rules, this guy, Sarius said. In addition, all these banks that have traditionally made those land acquisition loans are not making quite as many of those loans as they used to because of the stress in the banking system. See, all those small banks, all those small regional banks that in recent years past, they've been financing the construction loans, the home builder loans. They are not doing that as well because of the major headlines bankruptcy of several of the banks, including Silicon Valley Bank and two others. All right. And the First Republic, I believe. Anyway, yeah, so the banking system is going through some transition. The lending guidelines has been challenging not only to the consumers out there, buyers and sellers, but to the home builders as well. So that's a further headwind. How are you going to build millions of homes if you cannot find the financing to develop the lots in the first place? There's no simple solution, scalable solution to the housing shortage. Every organization, every industry in housing had to do their part. And only when everybody working as a team effort, where we will bring the housing market to a very healthy, balanced way, which is not happening right now. Bigger is better for home builders, publicly held home builders. They will continue to expand the market share and they can scale because they have a lot of, good profit margin. Because a lot of builders, they have a lot of profit margin. Therefore, they have the ability to do a permanent buy down rate. They can help you buy down the rate to around 5.5% range. Seems to be the trigger point for the consumer today, user added, because they know rates will never be 3% again. Those historical low rate we got in 2021 are once in a lifetime, once in a generation. It's not going to happen in my lifetime for sure again. So for those that have a lock-in rate of a 3% or lower, maybe you guys are sitting pretty, you guys are sitting in a gold mine, if you will, and they don't like the 7%, but a lot of people do not like the current 7% rate, but 5.5%, the builders, they can swallow, giving the consumers, the buyers, a rate buy down from 7% to 5.5% because they have the margin to do. That's an opportunity for a lot of buyers out there to take advantage of this builder incentives, right? This is a value add for you guys. The big national builders, they consist of a third or so of the total single family construction. The next up and coming thing asset class is build to rent, which, by the way, our builder in Florida and few other places coming up soon, we have the build to rent investment program for our mom and pop those investors. You can buy the houses, cash flow homes in this build to rent environment, which is our very fast moving industry. So if you want to participate into this, just log into my website below and put your email on there so you become a email investor insider within our investing community. Right now, we're seeing high interest rate, still very high home prices, growing housing deficit, baby boomer and millennial home buyers coming into the marketplace. And so a lot of these people these days, they want attractive buy down rates while they are still available during this current housing environment. So still going, build to rent, BFR market is up and coming market. User said in total, there are about 15 million single family rentals in the country currently, of which only about 4% are owned by large institutions, such as the Real Estate Investment Trust or REITs, like Invitation Homes, Blackstone, and a few other major institution players. Right now, they're only about 4% of the marketplace, but the projection are within the next 10 to 15 years, they will penetrate this marketplace. They may consist of 10 to 15% or more of the entire single family home purchase industry. So they are those large Wall Street institution players are increasingly become a major player in the single family home space. Okay. Just a word of warning. There's a lot of competition out there for single family home new constructions all over the US. So why are we seeing people's income, wages are up 12% since 2020, which is a mere 3 years, income has risen pretty well on a historical basis. However, but home prices were up at least 20% in the past 2 years. And in certain market, they're way higher than 24% increases in the past 2 or 4 years, and way more than 24%. And given what's happening in the mortgage rates, the monthly mortgage is up 74%. You believe that? So that just means that not everybody can afford a new house or a house altogether. So what this paragraph is telling you that even though the income has risen a mere 12% in the past few years, the home prices the mortgage rates have increased dramatically in the past couple of years, and the home prices have skyrocketed during the pandemic as a result of the historical low rates. That sentence mentioned that in my opinion, there are 40-year home affordability crisis right now. More and more people are being priced out of the home purchase market, and unfortunately, they're going to have to rent for the time being, for the foreseeable future. Therefore, the rental market is going to be strong. There will be more renters than ever before in the history of America. And America was created, 1776? They were waiting before that. That's why a lot of people cannot afford to buy homes anymore. They're staying on the sidelines. I don't know. I think the demise of the middle class is happening right now. So lower rates equal, if the mortgage rate comes down, it's going to help not only consumers, it's going to help builders as well, because lower rates equal lower development costs. We think it will be a growing segment over the next 5 to 10 years, said Mr. Farron. There's more demand for single family homes than supply. That's why a lot of institutional investors are continuing to like this segment, because it is agnostic with respect to what's happening with rates. So my takeaway for this long article information I just shared with you is that clearly there's no housing crash. In order to have a housing crash, there must be distress in the housing market. There's no distress because the current homeowners they're locked in on the mortgage rate. They're not going to sell their home with a 3% mortgage rate to move up to a new home that can cost them more money, higher price home at a rate of 7%. So essentially they're doubling their monthly mortgage payment. So they're not going to do that. They got a lock-in effect. So home sellers are not selling, create huge inventory of supply of homes out there. And new homes, as I stated throughout this video, it takes time to ramp up to build new homes because of all those reasons I just discussed. Lack of land, lack of permits, zoning restrictions, labor shortages, and material shortages. All those multiple reasons clearly state that the home shortage epidemic will continue for a while to come. Some say 7 to 10 years, some say even more than a decade, we'll have shortage of homes regardless of what happens. Even if the mortgage rate come down, in my opinion, even the mortgage rate come down to 6% or even 5.5%, you're still not going to see too many people let go of their no historical mortgages and sell to someone. That's the future. To me, is very bright, especially if you are primary home buyer, you buy for long term, you can afford it right now, buy right now, just no need to wait. If you are a mom and pop real estate investor, which I work with, which is my business model, right now is a great time to buy cash flow homes in fast growing markets in the South and Southeast, especially because especially when you buy new homes, you're getting a good incentive. You're getting a great buy down, providing you better cash flow. So right now it's a great time for mom and pop small investors to buy this low cost, affordable cash flow homes, new construction, with all these builder incentives, best markets in the country, especially in Florida. Thank you for your time. If you see any value whatsoever in this video, please smash the like button and also subscribe to my YouTube channel. By now, I'm going to need a lot of subscribers. Okay, a lot more than I have. And also, if you want to learn more about our real estate investment turnkey methodology, please subscribe to my website below, with your email on there, so you will receive free weekly emails in your inbox about great information about real estate investing, turnkey properties, buy cash flow homes in the most fastest growing markets in the country, in South and Southeast, and even some in the Midwest. All right, thank you so much for listening. This is Seewing Yee. I will see you next time very soon with another housing episode. Thank you so much. Bye-bye.